In this video, I'm going to give you a checklist to make sure before you place any of your trades, it only increases your odds of success. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you free, high-quality, professional level day trading and swing trading education, all for free, right here on YouTube and on X. So give me a sec. We're going to fire up these charts, and I'm going to give you the checklist. Okay, so now that we are in the charts, let's start going over a few things. Let's start going over first whether you are going long or short. So I'll give you two scenarios, both long and short. So the first question you need to ask yourself is, where are we on the daily chart? That daily chart is so underutilized in the world of day trading. A lot of people focus on the shorter time frames, like the 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, but they don't look at the daily chart. If you take a look at my actual trading screens, you're going to notice that on this here, this is what I use to trade. Now, I have the daily chart to the left-hand side on both charts, followed by the 1 minute chart. I'm always looking and referring to that daily chart. That daily chart, again, is super important. So the first question you need to ask is, where are you? Now, if you're looking for a long, right, for a continuation play or anything like that, and you're looking way up high for that long, you don't want to be leaning long, do you? Especially after a big extension. Now, the odds of having a short or looking for a short are increased after a certain amount of push to the upside. It only makes sense. And that's something that a lot of people don't take into consideration, is where are we on that daily chart? Now, keep in mind, and I'm a huge advocate of this, that no matter what we're doing on the chart, each and every day from a day trading perspective, which I am predominantly a day trader looking for short-term opportunity. Each and every day, you will have an opportunity to go long. But what I'm talking about, or short, it doesn't matter. Like even up at highs, there's still going to be an opportunity to go long intraday. But what I'm talking about is where you really can be applying the most size and pressure in your trades. Now, if I'm up at highs like this, I may still take a long, but I will use decreased size. I will use a version of my sizing protocol that is only indicative of where we are on these charts. And it's important that you do this. So let me give you a scenario of sizing, just an idea, just rough numbers off the top of my head. If I was looking for a long up top, I would be using size of a certain percentage of a full size position. If we want to say that my full size position is 100% of that size, of that full size, right? 100% representing full size. Up at highs, I'm using anywhere between 25 and half, 50%. That's all I'm looking to use size-wise. So using quarter size to half size until that chart unfolds. Makes sense, right? Now, if I was looking for, or I got the setup intraday for a short, it would be opposite. Now, I never use 100% size, but I'm saying off of a starting position, I would be in that 75 to 100% of my starting size position up at highs when I'm looking, or I get the setup, or the strategy dictates that I have a short. Now, if I am down here at lows, a pullback with no retracement back up, like it's not trending down like this, right? Where it has a chance to relax, it is just simply straight down. That's where I'm going to start looking for that long. We want to be looking for shorts up highs and longs after extended pullbacks to lows. It boils down to the same old saying we've heard 1,000 times. Buy low, sell high. Well, that information isn't wrong, but you have to know how to implement it and how to use it. So that's the first part of this. So like I said, the first question you need to ask is, where are we on the daily chart? Are we at highs or are we at lows? Do we have a sufficient pullback in order to start hunting and looking for that long? Again, it's not about having a bias. If you have a bias, you are doing this wrong. I'm just talking about if you get the setup for that long after a pullback, let's say like right in this area that we are right now, right at lows in this 550 area, you could absolutely start looking for long. Most people would continue to short this down just because it broke the 200 SMA. Well, we have also retraced from highs straight back down into that 10% range. That's another thing. Key percentages from pullbacks, like from highs. So we have correction and then we have bear market. That correction is 10% from highs. A traditional bear market is getting into that 20% from highs, from all-time highs. So let's talk about that 10%. You can definitely start looking and leaning more so long, not having a bias, but leaning if you get the setup for that long. When you start hitting that 10% correction, that 10% correction, a lot of people use in the wrong way. What they'll be doing is they'll be thinking it's going to continue to the downside, where in fact, that's when a lot of buy pressure comes in. In fact, on the day that it sold from all-time highs and it hit that 10%, the very first day it hit that 10%, it was 9.99% from all-time highs. Right at that point, there was massive buying pressure coming in intraday. Now, I'm not saying that it needs to go and break all-time highs again. It might. That's not what we're trying to do here. But what we need to understand is how far of a retracement from all-time highs are we? If you hit that 10% area correction, that becomes an area where you're looking for, maybe not you personally, but investors and swing traders, people that are looking to hold longer term. When you get those 10% corrections from highs, that is a correction, a technical correction. That is the perfect area to add in to your position safely because it is now at a proper discounted price. That's what they're looking for. So people aren't looking for more selling. That's when buying pressure will come in. And again, don't get it twisted. It does not need to bounce there. That's not what I'm saying. What you're looking for are areas to safely average in, add into your position. Now I'm talking from an investment standpoint because that's going to be important from a day trading perspective as well. They are intertwined. They are connected. If you have buy pressure come in from investors looking to add to their position safely at that discounted price point, you will have those areas where they will start averaging in more and more. And it's only going to help when you're looking for that long. Obviously, when you are buying a technical support area at that 10% area, and it's just one way to get involved or gives you more confidence in the trade, that's something to definitely take note of as well. Next up, what is the range doing? So after we determine we are at lows, in quotes, right? Because what is lows? It's relative, right? But when we are down at lows here, let's say in this area, has it hit support? What moving averages are in the way? What's it doing? Is it holding? Is it consolidating? One of the best things to start looking for is what I call, and I've been talking about for the last 9 years running my service, is the rounding effect. Okay, so I'm going to draw this out for you because it's the easiest way to explain this, because instead of finding an example where people can get it twisted. So I'm just going to draw this out. So give me 2 quick seconds. I'm just going to pull the chart to a nice clean area and let's draw this out. Now, it might be a little messy. My drawing isn't the best with these tools, but you guys will get the point. So let's say this is your support area. Okay. Now this is very basic stuff. So this level here, we're going to use as a support. So this is the daily chart. These are one day candles, right? We've sold off. There's a very valid pullback. And now what happens on this next day? So now let's say it's pre-market of this day. What you want to look for is that rounding effect. Does it have an ability to actually start coming up? If it's gapping down, it's probably not finished selling off. Like if this is our support level, let's say this is major daily support, and we gap down at the open. If we pop and we come into this, it will continue to sell. Now it might hold lows, but that's not what we're looking for. We are looking for a rounding effect. Do we have a rounding effect? And what that looks like is a gap up. So there's two ways to look at the gap up. Let's talk about the most powerful way. The most powerful way is if we gap an actual traditional technical gap up. We open up here, it dips into this support, which is the previous close. You execute that previous close and you ride this thing because she's going to come. Now, the first level of resistance up is most likely going to be the 5 EMA or the 9 EMA on the way back up, and it will come into those moving averages, either the 5 or if it's really strong, the 9 as well. So that's really important. And this is why I call it the rounding effect, because by the end of the day, that candle is going to look like this, right? And it starts to round. Now, the next day, you want to look for a day 2 continuation, but we have the 5 EMA and the 9 EMA. And those two are important. What you want to look for next is gapping up over all moving averages, because the next moving average up is going to be the 20, which is probably going to be somewhere in this neighborhood. So what you want to look for, if this is this day's action, when we gap up, we do not want to gap up here and be trapped between the 9 and the 5. It's major resistance. It's in our way. You have to look at moving averages like they are physical brick walls. Sure, you can pound your way through a brick wall. If you have a big enough hammer, you're getting through that brick wall. Hammer in this case being buying pressure, right? Or shorts getting squeezed, but that's still buying pressure. You can get through it, but we want it nice and easy. And the easiest way, the best setup, is when we gap up over all moving averages. So we gap over the 9 and over the 5. So with this gap up, when it opens up, that 5 is going to pull and the 9 is going to pull up a little bit. So what we look for then is the gap up here, dips into the 9. We execute that 9 EMA long, risk off previous close, as long as it fits your risk parameters. Okay, that's important. And then it's going to start cruising. This is the day 2 continuation. So this is the proper day 2 continuation. A lot of people will call this a day 2 continuation. It's not. That's your first day on the rounding effect. The first day 2 continuation day is where you get the big, powerful moves. And you're going to get a move most likely from the 9 EMA at lows all the way to the 20 SMA up here on the daily. Those are the big green days after that round. Now, I can honestly say I have executed this exact trade here and here literally thousands of times throughout my trading career. It is a powerful move and it's a very easy concept to understand. It works. But that's what we're looking for when I'm talking about what's it doing on the range. Like when we finally bottom, what does the action tell us? It's really important. So that's just for a long. Now for a short, it's essentially the same thing, but it's inversed. That's all. That's what we're looking for. We're looking for technical support or resistance. We're looking for gap ups and gap ups over all moving averages, all resistance. We don't want any resistance in our way. And if we do have resistance, that top resistance where you're going to bump your head, that's your target for the day. A greedy target, remember, we're day traders. We're not looking to take the whole move. I know a lot of you do that, but it's going to get you into trouble. So now I want to talk about the scariest moment. When we are looking to execute, we're looking to execute at the scariest moment. So let me explain what this is. Now, if you're a very new to trading trader or you struggle with getting your emotions under control, this is going to be very difficult for you to execute, but it is something you're going to have to work on. Now, I have a tendency to execute my trades at the scariest moment. Now, obviously, my heart doesn't, after doing this for 11 years, my heart doesn't palpitate when I'm in a trade or when I'm watching these charts. Yours probably still does, though. That's why you're watching YouTube videos, right? So that's something you need to get under control. But right at the moment, right at that scariest moment where you're like, oh shit, it's going to keep selling off as it's racing down into support. So I'm going to draw something out again for you. Again, I'm going to pull back the chart and I'm going to talk about the scariest moment. Now, if we have candles, daily chart candles, and let's say, intraday, because we're talking about executing now. So we want to be looking on the 1 minute chart. I use the 1 minute. We have regular candles. The size of a regular candle, let's say, is like this. Now, you will sometimes have smaller candles or maybe even a little bit bigger. Okay. But these three sized candles, just relatively speaking, are very normal candles. So as it's coming down, these are very normal candles, right? So let's fast forward down here now and get us into this level. So you're going to see increasing speed. Maybe there was some sort of intraday technical support here and it broke. Once it confirms, you're going to start getting these big snap downs. And then you're going to have that scariest moment. And what happens generally, not all the time, but generally speaking, when it washes and it really breaks, it's like this. It's right there. And it's a big forceful candle down and you're going to freeze. You're going to be like a deer caught in the headlights and you're going to be like, "Oh shit, I'm not going to take that. It's going to fail." That right there. That's your execution. And I'll tell you why. Institutions know who they're up against. We are the dumb money. Retail traders are dumb money. They are the easiest to take from. Why? Well, because they're trading with their own money. They're not using, somebody else's capital to trade with, right? That in turn leads to emotional attachment. And any way that they can manipulate the price action, remember, we all know or should be aware of that the stock market is rigged. I know people love to say that, and the market is manipulated. Okay, if we know this, then we need to use that and exploit that to our advantage. And a way to do that is to also know our opponent. Our opponent is institutions. They will use fear, our fear, against us. They will also use our greed against us. Those two things go hand in hand in the stock market. When we are specifically, or I am specifically talking about executing at the scariest moment, you need to remember this conversation I'm having with you right now, because that is the key. That is the ticket. When your lizard brain gives you that trigger, that emotional trigger where you want to execute the trade and you're like, hands off, oh shit, this is crazy. That's the time. That is the time to execute these trades. Now, I'm not talking about when there is a catalyst. Okay. When there is catalyst, because I'm a technical trader, I don't execute the trade. I'm looking for pure technicals. And when we have a pure technical market, everything that I'm discussing with you here today will work with high odds of success. We don't want catalyst. There's a lot of you out there that don't know what type of trader you are. And you will look for news plays, scanner plays, fundamental plays, chase some shit because some asshole on X talked about it plays. You don't know what type of trader you are. I know what type of trader I am. I am a pure technician, technical trader. I don't want any catalyst. If you're trading catalyst, what you're doing is gambling. That's what you're doing. And people will argue with me on that. You can argue all you want. I've been doing this long enough. Wild success and professionally. You can't argue with a guy that's been through this and done this for well over a decade and with the consistency rate that I have the consistency that I have is because I stay away from things like that. Now, there are going to be times when you execute a trade where then catalyst will come in and you're going to have to manage that trade out. That's a different story. What I'm talking about is taking a pure technical trade at that scariest moment, because what they are doing, institutions are doing, are clearing stops or finding gaps in volume between bid ask and all of that, and in just regular volume in the market to make it come down real fast. We all know when we've seen these stocks come up and it's like it comes up on air. Okay, it's the same thing, but to the downside, and it generally snaps down with volatility. It's pretty a violent push thrust downwards. Okay, that's the best way to explain it. And that's the moment. That's the moment, because they know people are going to freak out. That is their opportunity. They get us to freak out. So that scariest moment when we're looking for that execution, that's what we want. The scariest moment is something that you will have to work on. I've talked about the scariest moment, executing the scariest moment, lots on this YouTube channel, as well as in my service. But it's something that I prove all the time. You execute at the scariest moment and you get rewarded. Because at the end of the day, the best piece of advice I can give any one of you is to actually have a strategy. Don't trade off of setups. Like if somebody's talking about cup and handles and double tops and double bottoms, or it does 3 candles of this and does this and that, get away from them. They don't know what they're doing. That's not strategy. That is setup. You might find short-term success for it, meaning a week, 2 weeks, 6 months, a year, a couple of few years, but you will never be consistent long-term. And that's why we're all wanting to do this, right? Why you're all wanting to do this. You want to make a career of this. Now, the question you now need to ask yourself, what's your career span? What's a career for you in the next 3 years? Do you want to be looking for something else to be doing? Because if that's the case, go ahead and trade setup, because yeah, you will be washed up by then. And that's, again, like I have lots of videos on this and I could definitely talk about it more, but doing these things that I'm telling you to look for and to understand, this gives you, in all of these in combination, guys, they're not just one thing. Okay, I'm looking for the scariest moment. No, it's in combination, and we could quickly go over this. So where are we on the daily chart? So let's say on the daily chart, we are at lows right in this area. Okay, so now let's go over to back to our execution here. Now, did we gap up? Yes, we gapped up. Now, remember that sell-off coming down, snaps through, gaps up, pulls back into that previous close. That's the entry, our trade plan we're looking for. That's this level here, right? So we gap up, we pull back into that. Everything is in combination. You have to line all of these things up. Do we have a moving average here? Or maybe this is a moving average in combination with the previous close, which only gives you even more strength. And then finally, right at the scariest moment, as it comes slamming, racing down into that level, execute, and you will be rewarded. Absolutely. So I hope you guys all enjoying this. If you are someone that is tired of spinning your wheels, come to tricktrades.com and work with a coach that actually gives a shit and will make sure to do everything in his power to make sure that you become a successful trader. If not, enjoy my free content here on YouTube. Go right ahead. It's just going to take you longer, but you'll be able to piece it together. But if time is not on your side and you're tired of scraping and eking by in life and you actually want financial freedom, come to tricktrades.com. And if not, like I said, enjoy my free content, but you do in fact have to like and subscribe to this channel. I think it's only an even trade. So on that note, folks, I hope you learned something. I hope you enjoy this, and I'll catch you next time. Adios.